Hi, everyone, and welcome back to another show. My name is Tyler, and I'm with Matt, the founder of ORATS. ORATS is an options analytics platform built on top of over 15 years of historical options data. Our dashboard is integrated with Tradier, meaning you can research and discover trades on our platform and then seamlessly send them through to your Tradier brokerage account. So last week on the show, we focused on finding a custom call caller on KRE. And today we'll look at how that trade is performing. And then we'll move on to analyzing time and sales data and look at how we can develop a trading thesis using dollar delta. So Matt, if you're ready, do you want to share your screen and go over the trade from last week?
Yeah, thanks, Tyler. All right, let me know. You can see it?
Looks good.
All right. So here's Carrie. It's in our paper trading. ORATS has a paper trading for our dashboard product. All these trades, you should just do paper trading until you understand it very well and formulate your own investment objectives. These are for entertainment purposes. So here's Carrie. We put it on for $5, now down to $4.83. If you might recall, or if you go rewatch that, we were looking for the skew to come up, which is the put call skew. So we want the puts to go up. It was really low. Let me just highlight that. We could go to our trade builder, and then I could show the slope percentile. Let's look at that. So it's really low, and we still haven't seen it come up. So we've got a lot of time. We're going to be waiting around. The cool thing about this, so you can see that, Tyler, that flat lining of the slope.
Yeah, that looks like and that's kind of why our trade isn't really profitable yet, right? So we got some more time. How much time do we have left on this trade for the slope?
So our DTE is 46 days to expiration. And so that's why we put it on. We put it on for a long DTE. There's not a lot that could hurt us here. Our deltas are pretty flat, 5. As we talked about before, if the stock goes up, we kind of have that payout picture here. If it goes down, we have the little well here, but volatility should come up since we're long these puts, so that we'll be helped there. And as I'm moving my cursor, I could see what like the volatility as it goes lower. You can see that it's higher on the green. The blue.
So Matt, last week we talked about setting a profit target on this trade.
Right.
Can you explain why we did that and why kind of where you want it to be?
Yeah, great question. So I set it kind of low because if it goes up, I want to get out. So if it just keeps going up, I don't know if you could see. Here, I'll just take a picture. See this? Keep an eye on this theoretical today. So as you start off, it's 3, 5, 25, 50. So it's about 50 here, and that's 10%. That's where I set it. So I figure at that point, you can make as much as 100, but I'm figuring, when it gets up here, let's just take it off. Now, if it goes down is where we have a lot of profit potential. So that's kind of cool. Another cool thing about this is our call calendar. So, call caller. Most callers, and we explained it in the last video, are a short risk reversal where you're long the put, short the call, and long the stock. And this, you're long out of the money call, so it's less expensive than owning the stock. And it gives you that extra oomph, like you have what's called curvature, you have premium. So if it starts going down, you have the benefit of having that put, short call. So it's all gravy once you lose the call, which is a certain amount that you could lose, but the long put has infinite, or at least a zero payout potential. So that's why the outlook looks like this. So we're not too worried right now. We'll continue to show this trade as it goes on. I fully expect to, hold on to this for a while until we see either the skew come up, and that alert that we put on 10%. That's just we don't have to exit there, but it's just something that will kind of let us know, hey, you're profitable. Go take a look at it. Is the skew coming up, or is it just because the stock rallied? Does that sound reasonable, Tyler?
Yeah, it's one of my favorite trades. I think we're going to be pretty successful with it.
And why do you like it?
I like it just because we're taking uh, a pretty common strategy and then really putting our own touch on it and making the delta positive and kind of really honing in on our profit target there. Um,
Yeah.
it's really it captures our investment thesis, our trading thesis really well, right? Like we're looking for a very small thing, which is the change in slope, and then constructing a very specific trade around it, which I think is really neat.
Yeah, I think that's well put. And also, it's in our scanner to be slightly long. So when we're looking for these callers, we want to be slightly long, not too long. So that's what we're looking for. And again, we call it a scan for a very low put call skew. So the puts are low compared to the calls. We have stock scanners for that. Again, go back and look at episode 7, and if we want more information on that. Unless you have any more questions on this KRE trade, we had a couple other trades that were open by the time we were on last week. I'd like to go over. Is that all right, Tyler?
Yeah, that sounds good.
Okay,
I think
good.
we covered that trade pretty thoroughly.
All right, cool. All right, hopefully you can see this okay.
Yep.
No, you can't.
Yeah, I can see it.
Okay, cool. So we were open. We did this, double. So these are puts. These are puts where you're selling the front month, buying the back month, short only 4-day. So it was a double calendar, short-term double calendar. We only paid 25 cents for the puts, 25 cents for the calls. And so we were in it for 50 cents, which is nice because then if you could get these to expire, then you have a long strangle for 50 cents on IWM. That's pretty nice. So that's what actually happened. So we did the 190, it was kind of the 199, 195. It expired within those two. So we had just long. So that's what we wanted. And then the stock moved a lot. So it actually went to 204. So our calls, these 199 calls were in the money. 204 minus 199 is $5.10. So that's a lot to make on a 50-cent trade. So that's 10x. So that's pretty nice. So that's what happened in our IWM trade. Any questions on that one, Tyler?
That's a pretty profitable trade.
Yeah.
Yeah.
I love those trades. I have a call calendar scan, but I haven't been able to find any that cheap. When I say that cheap, I look at 50 cents divided by, let's just say 200. So that percentages I haven't been able to find. They're a little bit higher, but I still like them.
Yeah.
Maybe
we found that calendar spread with our contango indicator, and we did a stock scan for ETFs.
That's right. That's why they're so cheap, because the contango means the front month is way above the back month. So we were selling expensive and buying cheaper. And so that's why it was so cheap. Probably that contango is pretty high. Contango's kind of gone out of the market. And when we say contango, actually we'll be talking about it a little bit later, but it's the front month implied volatility is higher than the back month negative contango. All right, so that's that trade. And then we're continuing on our wheel strategy, Tyler. So we had at the last show, we had the 29th of December. It was the 26th, our last show. We were short the 474 puts for 349. And on the 29th, we expired at the SPY expired at 475.31, so above the put. So we got to keep all that profit. So we're doing really well on these short puts, even though I don't like selling short puts. This particular trade is doing all right. And again, if you forget, you can go back and look at our wheel video. But this is an interesting strategy. And as a matter of fact, someone on Twitter said that they've now changed their strategy. Again, paper trade, all this stuff, but they're starting to do a deeper selling call. So if we were to get the stock, we would sell the 70 delta call, which is in the money. So like if the stock was 475, it'd probably sell 472.
Right. Yeah.
So
we haven't gotten a chance to test that yet, but we keep getting we keep winning on the short puts.
What you need to do in this strategy, you need to make because you're going to lose, and then you got to get out of it. So we know how that goes. So all right, so that's as we do on the show. We review the trades that we did last week, and then now we're looking for trades. So should we start into that, Tyler?
Yeah, I think it's about time. So we're looking at the time and sales and the market intelligence tabs for this week. So both of those have information about the largest trades. The market intelligence has the largest trades for the entire market, sort of at a glance, with some tables here for unusual volume and intraday movers. And then we'll look at the time and sales tab in a bit, which has very specific time and sales data to a specific stock. So large trades for a specific stock versus market at a glance.
All right. Yeah. So I start with the intraday movers. What's moving a lot today? You got some small stocks of Axle. It's down 30% today. We come up with this thing where we highlight the bigger, more popular stocks. So mRNA is here. It's also on the unusual volume over here, mRNA. So why don't we start with mRNA? Check that one out in the new time and sales, Tyler.
Yeah.
Hold on to your socks, people. And any feedback, just put it in the comments. Do you like it? Do you not like it? Any ideas? But check this out. I think this is really neat. So this is our new time and sales. And what we're doing is we're showing these large trades. So we sort these large trades. And we look at things like dollar delta. We look at things like total premium purchase. We look at things like total profit, which is where someone bought or sold versus where it is now. And we also look at volume versus open interest. Is it an opening trade? So if there's very little open interest, so for example, this one has very little open interest. So this is probably an opening trade. Whereas this one, you can't tell if it's opening or not because it's 700 contracts traded, 714 open interest. Open interest updates every night by the OCC. The OCC determines open interest if it's a new trade, not closing trade. So that's what that means. Usually opening trades are tracked more by traders because it shows that someone getting into opening a position that they might feel is happening.
Yeah, that's a very neat thing that we can track there. Do you mind
going
over what the dollar delta is and kind of what it means and why we think it's so important when tracking time and sales?
Yeah, so dollar delta, I mean, intra-stock, it isn't that isn't as important, but inter-stock. So if you're comparing a $114 stock to a $10 stock, 10 contracts is going to mean a lot more in the higher stock, right? So what traders do, and we've looked at dollar delta since I was a market maker, is we'll just multiply what the delta is of the trade times the stock price, and that has it's a pretty good way of normalizing what's trading a lot. So we track that, and what we do is we look at the total long dollar delta and just update it. So this thing is highly responsive versus the total short dollar delta. So what we've noticed is they're long in Moderna. Well, also Moderna is up 13.69% today. So they've been right, and they've been especially right at the beginning of the day. So that's why they're profitable. That's why we say they're profitable, because they've lost very, very little bit. So this graph, the green is the profit. The losses are very small compared to the $1 million. They've only lost 90,000. So they've been long and right in Moderna. So what do you know, Tyler? Do you think someone's knew something and is front running? I don't know.
They might be, but it's really cool to look at the dollar delta. It's sometimes it looks quite the forecast of it looks pretty good. You see that really long one. Can you sort by absolute dollar delta and kind of
so you can see we can sort by symbol, which is meaningful here. It's meaningful, and the other one's open interest. But there's profit, how much profit you have, but you could also sort by dollar delta. And then if we look over there, there's an $8 million long trade, and then some short trades. Some of these short trades, what was the time? So yeah, these are more often than not later. So this is in the morning. This is someone that just knocked it out of the park. They paid up, but they made a lot of money on that one. So yeah, you can see the dollar delta is just multiplying the delta times the contracts and times the stock price, and that's how we get that number and determine how long it is, and graph it versus the short dollar delta.
Great.
So any other things before I kind of go with the thesis?
Yeah. Well, I was just kind of, leading into that. I'm wondering if there's anything that you can do, any trading thesis focused around the dollar delta and the premium. So do you have a different thesis if you're long delta and long premium, or long delta and short premium? Like if you're looking at this table and this summary.
Right. Yeah. So the first thing you think about, okay, just think of a single leg. What is long delta and what is long premium? So it could either be long or short, or call or put. So what is that? Well, long delta could either be a long call or a short put. Long premium is only a long call. So when you see long delta, long premium, that's call. So they're buying calls, and we see that.
Mm-hmm.
And the inverse is true. If it was long delta and short premium, they'd be selling puts. Short delta, long premium, buying puts. Short delta, long premium or short premium, selling calls. So those are the only four things it kind of can be. So that's how you just get a look at what they're doing in this particular stock.
Right. So that's sort of framing our trading thesis, right?
Yeah. So with me, I don't like trading like these smaller healthcare biologies, but one thing that's interesting to me is usually when the stock goes up, the volatility comes down. Now with biologicals or healthcare, often that's the inverse. Like that's why their skew is sometimes skewed towards the calls, where the calls have a higher implied volatility, because what happens is they'll get most of their volatility with an announcement, and it usually will be an gap up. Whereas most stocks, they'll go down faster than they go up. But these healthcares are often different. I don't like to play these that much, but what I do like to play is when something like this is happening. Moderna is a pretty large piece of the ETFs. So if you go to the outlook for Moderna, we can look at what their implied volatility is compared. This is the graph of Moderna to the XLV, the components of the XLV. So Moderna was way down here and has come up. It's a higher vol stock than a lot of the pharmaceuticals, but that relatively has been dragging up, I think, dragging up the XLV. So my thesis on this would be that maybe the XLV has gone up because of Moderna, but is that really, should it be that high? And I would think maybe it isn't. I would be bullish. There's something going on out there, but I don't think I'd be bullish on IV. What do you think, Todd?
Yeah, I agree, and this is something we do a lot here at ORATS. Is we're looking at the closest SPDR sector ETF, in this case XLV, and we have this component. So can you go over that _C symbol right there? I think people might not be familiar.
Thank you. So we do a neat thing. We know all the percent weightings in each ETF, and we look at the underlying components, and we do that weighted average. And so so that weighted average is something, and then Moderna is IV is something, and we compare that over time, and then you could start to get a feeling for where is Moderna? So, what we would say is Moderna, it's always about 2 times. So that, right here, 2.0 means it's 2 times the normal XLVs. But it's not only, so that's kind of was their average before, but now it's up to 2.6. So that's 60% higher of this reading. So first of all, I think Moderna's IV would be high based on that. So that's why I really like looking at the components. You could see, and looking at them historically, because you could really see that they're bidding up this implied volatility.
Yeah, that makes a lot of sense.
Yeah.
So we want to trade this ETF, right? This XLV.
Yeah. So let's do the same thing for XLV. Let's take a look at. So not only do we look at how Moderna compared, but how does XLV compare to the components, right? So that's a really good one. So what this is saying is that XLV is pretty low and it's starting to come up. So maybe, I don't know, maybe we bet on vol going up, maybe bullish vol going up, maybe my favorite, a calendar, Tyler.
There you go.
Are people getting tired of calendars?
Maybe. We've done quite a few of them these last few weeks.
I like them because they give you a little bit of vega when vol's low, and you have a theta because you're short that front, and then if it comes off, you could still have a long call if you want it. So let's take a look. So let's go to the option scanner, and let's go XLV. There it is, and here are some long strategies. Now we have the call calendar in there as well. And then, so what we do is we're looking at these 1, 2, 3, 4, 5 different strategies, and how do you find the best one? Well, we do certain things. So we could look at the ranking. So we have theoretical values that we could compare. Like it's a little much to get into in this particular presentation, but I like to use this distribution edge and this forecast edge, so that's why they're weighted there. S edge is just is a smoothing, so that it shouldn't get that much out of whack. It should be pretty close. That just measures the relative volatilities around. So you don't want to see a smooth edge large or small, or you're not going to get filled. Like this 2.7, that we might have some trouble getting filled on that, but we'll check it out. Reward to risk. I like those because that's the trade-off: probability of profit, reward to risk. So those are things I like to sort on. So that's why they like a short put spread. Should we do a short put spread or my call calendar?
Let's do a put spread.
All right. I knew you were going to say that. All right, XLV. So let's look at a couple of these put spreads. So and see how we feel about it. We want to be a little bit long, and this is the delta is pretty long, 28. So that might be a little bit long for my taste, and you have kind of a fair amount of loss here compared to what you're going to make. So I'd like to.
We can change how we weight those metrics. That risk reward maybe needs a little bit higher.
Yeah, I'm also going to look at the delta too. I don't want to be that long.
Mm-hmm.
So the max delta I want to be on this is let's just say 0.2. And then, so then that will get me, hopefully and then, risk reward. This is betting 1 and risking 2.6. So 1 to 4 is probably too much. And you could say what your what the most and what the least is. So if I were to say 0.4, that would get rid of a lot. And if it was 0.5, that's 1 to 2. So I'm just going to say those and then take a look at what's coming up. Now my calendar's come up, but we'll give you this one. We'll give you this one. So the stock's 138. You're selling the 138, but you're buying the 136. So the risk reward is 1 to 2. What do we think about that one, Tyler?
That looks pretty good to me. Do you have any exit alerts that you want to add onto that? Are we thinking about exiting at a certain time, or?
Yeah, that's a good point. So whenever we talk about exit alerts, we go to our favorite area of all, XLV and short put spreads. Okay, so so Tyler's asking, okay, great, you get in, but where do you want to get out? So luckily we have all these back tests pre-run, and we could look here. Although we haven't run the extra alerts on these, so let's look at something like SPY as a proxy. The short put spreads. I'm guessing that they get. I would guess that there's some. Yeah. So short put spreads ascending. Okay, so they do have stop losses, and they do okay. So I don't know if I would have guessed this, but so here are some out of the money put spreads that that the best ones here do have stop losses. So let's look at the worst ones by sorting them in descending order. Usually what you see is a lot of these 25%, that's too much, getting in and out too fast. So we're not going to do that. So, but we do want to get out. I think, maybe a 50, 75, something along those. So why don't we think about that, Tyler?
Okay. Yeah, it sounds good.
You happy with that answer?
Yeah, I'm happy with it. Yeah, we're gonna get those exit triggers in the XLV pretty soon, so that'll be good to look at.
Actually, let's split the difference. Let's go 2/3 or 66%. If we lose 6, okay. So we'll go paper trading. I put my notes, and then Tradier Hub.
Cool.
Based on Moderna, long delta, and pumping up the ball a little bit. So let's put this in. So down here when we're trading, this is another thing to look at. So at the midpoint 60, we have it worth 60 on the smooth edge. So that's what market makers look like. Probably should give them a penny or two. So I feel pretty confident that we would be able to get filled at 58 cents. So, and I'll force it so you could make it so you have to get filled there. So I'll send that in paper trading. Of course, it doesn't work in the real world, or else we all be millionaires. So we have that trade in, let me go to my favorites, and let's look for the wheel strategy in here. And this is that 50, 70. So let's look at this real quick, because we need to put on a trade for this one. So we're going to scan for options. This is the one that we've been in for a while. We're selling a 50 delta. Is that the one? Is that one? I thought it was shorter term. Let me see if there's another wheel. That was it.
I think that was the one.
That was one. Okay. Yeah, that makes sense.
Yeah.
All right. So scan for options. So we're looking for these puts, and this is right around the puts that we normally sell at the money, a little above the money there. So let's go put that on in our account. Again, 590. We're selling for 591, so we're gonna have to do that on the bid. I'll just force it there. All right, so we could continue to watch those.
Right.
Yeah.
Cool. Yeah, well, I think we're about out of time, but I just wanted to recap what we did, unless you have anything else, Matt.
No, that's great.
Cool. Yeah, we kind of hopped around a little bit, but we started in the market intelligence, and we looked at finding some large trades, unusual volume, and top movers. We checked out Moderna, and then we looked at the time and sales for that specific stock, which kind of gave us an idea of what traders were doing. So they were a long delta, long premium, and profitable. And you can see that in the summary. So because Matt doesn't like to trade these biotechs, we kind of hopped over to Moderna's ETF and then traded some options on that. So that's kind of how we got from A to B there. Do you have anything else to add there, Matt?
Yeah, that's good. Thanks for listening.
Yeah, that was great. Well, yeah, we'll go over the trades again next week. So yeah, thank you for Tradier for hosting us again, and we'll see you guys next week.
Thanks, Tyler.